welcome back. You're watching Dealing Room. A quick check on the markets and Infosys. That is the stock of the day. The earnings season has kicked off with Infi announcing its numbers. Street seems a little disappointed. The stock is under some pressure. This comes in despite the fact that the company has given into street pressure or founder pressure that has been on the rise in the last few months. They've talked about 13,000 crores that would be given out to investors either through a dividend or a buyback. They've also appointed a new core chairman, Ravi Venkatesan, who's an ex-Microsoft India head, to, of course, drive the digitization part of the business. And let's not forget, this could be a precursor to a lot more things to change at the realm of affairs at Infosys. The stock is under pressure, down 2%. The guidance is below expectation, and the margins as well could be under pressure. And that's, of course, what is keeping the stock in check today. Well, we have with us Mayuresh Joshi, fund manager of Angel Broking, now joining in. Mayuresh, before I talk to you about the markets, your reaction on Infosys?
Good morning. I think the reaction is obvious because the street was factoring a 7 to 9% constant currency growth. And what the management has given out is far more conservative in terms of the constant currency guidance that they had revised last fiscal 3 times. So they are being a little bit more cautious this time around in meeting out that guidance and probably even reducing the EBIT margins for obvious reasons related to currency headwinds, salary hikes that are expected to come through, what happens with Brexit is an uncertainty, and what happens with Trump policies in terms of the H-1B visa regulations. So I think all these factors are probably playing onto the stock. But in my opinion, again, I think it's far more conservative, and the management commentary thereof in terms of digitalization, client wins, automation is going to be far more important going ahead in terms of the roadmap laid out. Specifically, I think the targets that they put through in FY20, I think those growth rates seem to be a little bit more improbable right now. So how the management is going to cope with that to achieve or get close to the targets is going to be very, very interesting.
I completely take your point. H-1B visa concerns, rupee headwinds, Brexit worries. I mean, everything you've mentioned is synopsis with the IT industry right now. And we've seen that play out on the stock in the last 3 to 4 months. Last couple of weeks was about Infi's underperformance because they weren't giving in to street pressure of a buyback. This morning, with that press release, we've seen that 13,000 crores is going to be paid back to investors either through a dividend or a buyback. Now, I would imagine this should, of course, be good news for the stock because you're getting an additional 6% dividend yield in addition to the 70% of free cash flow that will be paid out versus the 50% of profit after tax that was initially the norm. Why aren't we looking at that as a near-term positive?
Well, I think the headwinds are probably offsetting the tailwinds that this company is facing. Yes, it had around 37,000 crore worth of cash on its book, and it needed to utilize that. Now, in a situation like this, in a demand environment which appears very, very volatile and sticky, I think the management has been very, very prudent in announcing an additional dividend payout ratio to 70%. And that is going to probably soothe investor nerves. And that's the whole reason that you're not seeing the stock fall off the radar or off the cliff in the proportion that one really expected. So largely, again, I think it's utilization of cash in a very tough business environment that they're paying back to the shareholders in terms of rewarding them in some sort for the underperformance that the IT sector or the industry might generally face over the next few quarters, to say the least.
Right. Mayuresh, do you think that from the margin standpoint, since attrition has also fallen for the last 4 quarters and the timing is up for and ripe for wage revisions, that could be additional pressure on margin contraction?
Oh, yes, and that's the whole point that I was driving through, that what they've given 23 to 25 seems to be really more realistic in terms of all the headwinds that we've mentioned. And yes, I think salary hikes will take place, which will also probably eat into the EBIT performance. But largely, again, I think it's the order book that will do the talking for Infosys. They're sitting on a huge pile, so the deal ramp-ups and the execution thereof is going to be extremely critical for the company going forward. Again, attrition coming down, I think you can view that to be mildly positive because I think as utilization levels start improving, the client profile in terms of execution on the client side will probably go on a fast-track basis. But the entire focus here, again, is generally for the IT sector facing a lot more headwinds rather than tailwinds, at least from a short to medium perspective.
I just want to understand from you when you talk about client additions, and I think that is most important here. Last couple of quarters, they've not managed to add any large clients. In fact, I think last time around, they only did 2 client additions in the $75 million plus deals. This time around, they've added 1, but they've actually lost a client as well, which is about $100 million. Now, that to me would be a little concerning, because forget increasing wallet share from existing top clients, which they're not managing to do. They're also losing clients. I mean, how does one view this? Because we've not even reached Brexit, and we've not even reached Trump actually executing whatever he's saying, and Infi's already losing clients. I mean, retention of clients is also a bigger problem here.
So largely, again, when you're talking about transformation of the business to digital, to automation, to artificial intelligence, you probably need far more higher ticket sizes, and the bucketing thereof is going to be extremely critical in terms of even the margin performance for the company going forward. So how the company is actually able to execute their client concentration and client wins is going to be extremely critical, and that's the whole point I was going through, that the management commentary thereof is going to be extremely critical in terms of getting those client wins and the big client wins on board. And then the entire thing about the transitional or the traditional business, whether that will eat up the kind of margin performance that it used to give out, whether the digital transformation will probably eat up the margins out there, is also a cause of concern. And how much ramp up they're actually able to do is going to be extremely critical for the company going forward. But the only solace that the company probably has is the huge order book that it is existing. It's already sitting on. So I think the execution thereof is going to be also critical for the company, which I think the company will probably do. But yes, I think client wins and client ramp up is going to be extremely critical, specifically in the digital and the Internet of Space.
Mayuresh, very lastly, what's the call on the stock at 946 after months of underperformance? Do you think a rebound is likely, or would you be looking to downgrade the counter? A, and B, what would you be watching out for when the management addresses the press conference later on?
Well, so two critical things here. In terms of earnings, the earnings still look extremely sticky, at least for the next 2 quarters, because of all the uncertainties that we've probably spoken about. So yes, I think there can be a slight hit or revision in terms of the earnings per share that you're probably working out from an FY18 perspective. Having said that, the current valuation probably is far more attractive for the top tier companies, including Infosys. But again, I think that the performance might continue, as I said, at least for the next 1 to 2 quarters. What I will ideally hear from the management again is how they're probably ramping up, as I said, their client profile, the client wins, what they're probably looking at in terms of the client landscape, the pricing environment, how are they viewing client discretionary spending happening, specifically in terms of digitalization and automation taking place, Trump policies, whether there's going to be any outsourcing contracts expected to come through in terms of a Brexit. So I think all these things need to be closely followed from the management commentary.
All right, Mayuresh, we would ask you to just be with us for a bit. There's also some management changes that have been notified. In fact, addition to as a co-chairman and in the post of a co-chairman, Mr. Ravi Venkateshan, and he is from a digital background. He's from Microsoft, and it's for a digital transformation push that the company is intending, is what has been stated. Shriram Iyer is joining us with a detailed profile of the man at the helm.
Yes, Pranoy, here Ravi Venkateshan